Leaders from around the world convened at this week's World Economic Forum in Davos, Switzerland, for high-level talks on the biggest topics on the minds of companies and countries. And that, of course, included digital assets. I want to send things over to my colleague, Ashley Mastronardi, who has more on this story.
So what is Avo Labs' presence at Davos?
Yes, so first of all, Avo Labs builds Avalanche, which is a high-performance, ultra-fast blockchain platform designed for institutional, finance, and enterprise applications. And so Avalanche enables governments, financial institutions, and corporations to deploy custom blockchain solutions that reduce costs, accelerate settlement, and unlock new markets. And we're very excited as our policy team called the Avalanche Policy Coalition is on the ground at Davos. They serve as our global hub for engagement with policymakers, and colleagues from the coalition are on the ground in Davos this week. Each January since 1971, the World Economic Forum annual meeting has convened global leaders to address shared challenges, from unlocking economic growth to deploying innovation responsibly at scale. And this year, stablecoins and tokenization are central to that agenda. And so in that context, our policy team is participating in panels hosted by the Global Blockchain Business Council, which brings together policymakers, regulators, and financial institutions for focused public-private dialogue. And our team is sitting alongside institutions such as Euroclear in discussions centered on the reality that financial instruments are now becoming natively digital and programmable, and unlocking new levels of automation, interoperability, and composable market design.
And Olivia, you mentioned those stablecoin and tokenization panels at Davos. What was your takeaway from them?
Yes, the Davos conversations on stablecoins and tokenization have centered on a question much bigger than any single tokenized product. And what's emerged, in my view, has been really profound. We're witnessing tokenization technology reimagining the financial architecture that served us for the past century, unlocking new possibilities for how we move and manage value globally. And at the center of the discussions was credit creation. As it stands today, traditional banking ties savings and lending together with deposits funding loans through fractional reserves, and stablecoins break that link. By design, they are fully reserved and do not multiply into credit. And so as value increasingly moves into stablecoins, credit doesn't disappear, it evolves, and it shifts into capital markets, private credit, and programmable lending layers. And panelists such as the IMF's Dan Katz described this as disintermediation risk, while Standard Chartered CEO Bill Winters acknowledged it as a fundamental change in how credit is funded, and that banks may no longer be the sole engine of credit creation. And that's why the stablecoin interest debate, Ashley, became so heated. On the surface, it sounded technical. Should stablecoins pay yield? But in reality, it was about who controls credit creation itself. And Coinbase's Brian Armstrong argued that consumers should earn on their balances, and that U.S. stablecoins need to remain competitive with China's interest-bearing digital yuan, for example. The governor of the Bank of France pushed back, however, emphasizing that monetary policy works through banks and weakens when deposits move outside the banking system. And so regardless of where the conversation goes and where the policy line is drawn from here, adoption is really being set by market forces. Panelists point out stablecoins are scaling where friction is highest, with cross-border payments, remittances, and emerging markets. And AI is only going to accelerate this, because billions of autonomous agents will soon transact continuously and at a pace that card networks and bank wires may not be able to support. And so the primary takeaway from these exciting discussions is that finance is moving from balance sheet trust to infrastructure-based trust, and unlocking a more resilient, accessible, and innovative global financial system that, is made that with possibilities that we're only beginning to imagine thanks to blockchain technology.
And you're speaking about the adoption of this technology, and from the passing of the Genius Law to the Clarity Act, how have you seen the regulatory environment shift in the past year or so?
Yeah, the past year has marked a very exciting shift to regulation through engagement. And that shift became concrete with the Genius Act last summer, which marks the first major U.S. crypto legislation. It established a federal framework for dollar-backed payment stablecoins with clear reserve standards and guaranteed redemption rights. And that sent a really strong signal that Stablecoins are ready for institutional adoption with downstream effects across payment rails, capital markets infrastructure, and digital asset liquidity. And it passed with bipartisan support, showing that crypto policy can in fact move through Congress. And with stablecoins addressed, attention is now turned to market structure. The House passed Clarity Act, providing regulatory clarity for digital assets beyond stablecoins, and both Senate committees are advancing their versions. The risk now is timing. If legislation slips past March, midterm politics could potentially slow momentum per some panelists. And that's why regulators don't need to wait. The SEC and its CFTC already have the authority to provide interim clarity through targeted rulemaking and exemptive relief. And looking ahead, our policy team is focused on three priorities. First, getting tokenization classification right, especially for tokenized real-world assets, so that regulation follows the asset, not the technology. Second, protecting the line between infrastructure and intermediaries. Regulation belongs with the businesses operating on top of the rails, not the blockchain rails themselves. And third, defending an open internet so that blockchains can function as finance and commerce move online. And so taken together, this shift is turning regulatory fog into a clear runway for institutions, enterprises, and others to deploy blockchain infrastructure.
All right, thank you, Olivia Vanderwood, tokenization lead at Ava Labs. Kristen.
Thank you so much.
Thank you. Kristen, back to you in the studio.
Ashley, thank you so much. Of course, the space will continue to follow closely here at the NYSE.